Easily double up your profit just one indicator? MACD top secret and rare usage waiting you to learn today. After finish learn from this video, you will give up away the traditional and simple go cross and dead cross strategy in MACD. Hi everyone, I'm Angie who loves to share stock market trading experience. Friends who watch the video for the first time, don't forget to hit subscribe and turn on notification bell, then you won't miss any strategies sharing from me. MACD is one of the most common used indicators in the stock market, but many investors may know only its basic usage. In fact, MACD still have a lot hidden trading strategy. As long as you master it, higher chance to gain double profit in this year. Let's get started. In today's video, we mainly explain 3 rare usage of MACD. Method 1, Crocodile mouth model. Method 2, Gold winding model. Method 3, little green in 1000 red bushes. Let us explain the first case in details. Crocodile mouth model. What is the crocodile mouth model? Generally speaking, we all know that the above zero axis is the strong zone. Below zero axis is weak. So when the strong rise, then the both line far away from the zero axis. Then in the short term, pull back, the dead cross is appear. Some stock will exchange time for space, quick and actively pull back to near zero axis. Let's relook at the second case. Also go into a correction period after wave of rise. Slowly come near 60 days moving average. The following MACD also return near the zero axis. Look at here, slightly below zero axis. The double line is near the golden cross below the zero axis. The above stock price is back above the 60 days moving average. At this time, carefully observe MACD trend below, especially like a crocodile mouth, then enter immediately. If following keeps stand above 60 days moving average, then there is the big chance for big wave rise. We look into another example. It's also about the crocodile mouth model. Some stock may have just broken through 60 days moving average with little increase, then slowly oscillate in the sideways trend. As the result, stock price come close to the moving average, even fall below the step back. This area make a lot of people lose patience, and the following MACD golden cross appear continuously near the zero axis. Go cross and go cross. Although there were cheating enter line in the previous 2 times, but the final 3rd time is still a success. Then following with a strong rise. This is to say, if we discover the crocodile mouth model, even with the false enter signal, we can set up stop loss according to moving average. What does that mean? For example, in this point, there is a golden cross near the zero axis. Obviously, the crocodile mouth model did cross soon after we enter, but it can be hold if it does not fall below the moving average. And if the stock price fall below the moving average immediately after the golden cross, then we can temporarily cut loss and exit to prevent the risk of big drop. And if the future is through golden cross able to stay above the average, then you can hold strongly. Grab this wave of sharp rising profit. Let's look into second point. Gold winding model. What is the gold winding model? It refers to some stock after breaking through the 60 days midterm moving average, but not much increase, even mostly into sideways. Opportunities are brewing in a slightly volatile upward trend. But sometimes if you mess around, it often falls after buying. The gold winding refers to the stock in the ready to go, guaranteed to be above 60 days moving average and above the zero axis, continuously oscillating in the sideways trend. After a few times of gold cross and dead cross, then both MACD lines are not far away, then forming winding area, and once the winding area are completely over, both lines start to go further away, then is the timing to enter. Then we can grab for the strong rise. Such a golden winding model is suitable for those investors who doing short-term speculation, because those big bull stocks should buy before it rises, getting out of this volatile and slightly upward trend and the corresponding MACD below. It will form a relatively not far area above the zero axis is the golden winding, because some investors see the chart is so messy, thought it was a bad stock, but this is just for the surface. Once this golden winding area is broken through, there was a strong rise. Let's look at another gold winding effect example. Sideways after rising, then appear a big bullish candle, but before this, 2 to 3 weeks weak candlestick or doji have successfully made a lot of people lose patience. This is to flush out the market weak holder through the sideways oscillation, so the following MACD appeal again. The gold winding we just mentioned, two lines are closed and appear few gold and dead cross, but still not separated the distance. That is to say, the upward golden cross is not separated. Even the cross down, it will not separate until the final separated directly. Then enter immediately and grab the strong rising profit. Let's look at this case again. It's a gold winding after the stock price rise from 60 days moving average. A sudden pullback close to the moving average, then it is dominated by a shock and sideways MACD below. Not far above the zero axis, repeated the gold cross and dead cross, and then the two lines are close to each other. Finally, the double line spread at this position. It obviously you can go right in, then the stock price go into a strong rise. Method 3, a little green in 1,000 red bushes. This method is suitable for catching some sudden pullback of strong stock. The pullback will start another stronger rise. Even some strong stock are in the strong rising stage, only 2 or 3 bearish candlesticks, a maximum of 1 week's pullback. It is often easy to appear such a little green in 1,000 red bushes. Specifically, the following MACD double line leaves the zero axis and goes upward. Suddenly, a fast drop below the slow line. That is to say, the fast line is crossed and the slow line is crossed, but soon a gold cross appeared. So there is only one green column. Then the candle shape at this time is very important. It happened to be the negative line for the day before. Gap the next day continue to rise from a breakout line. Enter here directly, followed by a very good rise. A little green among the red bushes is above the pullback of strong stock, more suitable to help we catch reversal buying point after a sudden fall. Sometimes he will also be in the early stage of the rise pullback that appear. For example, the position in the picture has just crossed the 60 days moving average. A quick 3 days pullback below the moving average, immediately there was a gold cross and there is only one green column here, followed by red columns. Then although there is a pullback in the middle, but eventually continues to rise. So a little green in a red bush is like this. It's difficult to appeal it, often an excellent buying opportunity for us. I hope everyone is in the actual trade pay more attention to such cases. Let's talk about a very special case. That's what we were talking about, one point of green and the second point among the red bushes. Gold winding appeared at the same time on the way this stock crossed the 60 days moving average. Slowly, the moving average started to go sideways and rise. After this, gold winding appeared at the same time on the way this stock crossed the 60 days moving average. Slowly, the moving average started to go sideways and rise. Then after this, pullback, a period of oscillating upward moving begin. Not strong and weak. Many stockholders are very easy to lose patience during this period. But take a closer at a MACD trend. In fact, the double line is above the zero axis, but not far and repeated dead cross, gold cross, dead cross again. Generally speaking, this kind of gold winding is the best not to be too far from the zero axis. Simultaneous occurrence of at least 2 to 3 repetition, and double lines are very close. And in the last position in the diagram, we can see clearly the green column here is only 1 day. And in the last position in the diagram, we can see clearly the green column here is only 1 day. On the left are 4 red columns, and the right side also constantly red column last. This is the formation of the little green in 1,000 red bushes. So this position, if we start to enter, just in time to grab the rise in the following. Entry point at this position is the gold winding of number 2, another little green in the thousand of little bushes of number 3. In today's video, we focus on 3 hidden buying point or rare buy point. If you have any question, welcome everyone to leave the message in the comment area. I'm teacher Angie, who loves to share stock knowledge. If you like this knowledge I share today, please hit a like button in this video. I'll see you again in the next video. Bye bye.